Hey everybody, welcome to the channel. Hope you guys are doing well today. In this video, we're going to be talking about a handful of Cosmos related projects. Osmosis is the first and only DEX on the Cosmos network. Their AMM model is very nuanced. They've taken elements of Balancer, Curve, Thorchain to deliver us a high quality decentralized exchange. This is going to have a significant impact on the liquidity profile of a lot of Cosmos tokens. If you take a look at many tokens like XPRT, Akash, or Sifchain's token ROWAN. Currently, those tokens aren't available on a lot of exchanges, and if they are, typically you have to do a KYC, and so for that reason, they're not very accessible to most investors. So I think there's a good chance that these tokens are going to go on a pretty nice run once they're added to more automated market makers in the Cosmos network. And on top of that, pretty confident in saying that they're probably going to offer robust rewards to seed these pools with liquidity, and by being early participants, I think we can benefit a lot from this. So in this video, I'm going to give you guys a brief introduction to a handful of the projects that I'm looking at, and towards the end of the video I'm going to share some of the strategies I'm going to deploy to take advantage of this opportunity. Most people have their Atom tokens staked and they're earning a yield. In order for them to unlock those staked tokens, they have to wait at least 21 days. So I'm thinking we have at least a few months before these guys find out what's going on and they start unlocking their tokens to seek yield in some of these new DeFi protocols on Cosmos. I've been telling my Discord members about this for a couple months now, so if you want to be alerted about these types of opportunities ahead of me making videos, make sure to join my private Discord channel. It's a great forum for you guys to connect with like-minded individuals and learn through dialogue. Or if you don't have time for Discord, at the very least, make sure you guys check out my Twitter profile and give me a follow. This way you can keep track of which projects I'm interested in and which yield farm opportunities I'm pursuing. Whether you want to join my Discord channel or you want to give me a follow on Twitter, both the links can be found in the description below. With the intro out of the way, let's go ahead and dive into this video. Alright, to begin with, the first project we're going to cover is Akash Network. I like to think of this project as the Airbnb of cloud storage and computing. Currently, the most dominant players that we have today include Amazon Web Services, Microsoft Azure, and Google Cloud. Overall, it's a $370 billion market, and the reason why it's become very popular within the last couple decades is because it saves companies a lot of money on infrastructure cost. So instead of investing large sums of money in the hardware themselves, they can go ahead and use a pay-as-you-go model, which saves them significant amounts of money and time. In the context of DeFi, I think this type of infrastructure is very important. It's just a matter of time before somebody figures it out, because in my view, it's an attack vector for a lot of these DeFi protocols. Let's say a state actor out there isn't happy with one of these DeFi protocols and they want to take them out. If that DeFi project relies heavily on some of these cloud companies, it could potentially mean the end for the protocol. So if Akash delivers on their promise to create a censorship-resistant, permissionless, and self-sovereign open-source cloud, it's going to strengthen the collective security of a lot of these DeFi protocols. In terms of the progress the team's made, they integrated with Equinix Metal to provide the first viable decentralized cloud solution. And this is pretty significant because Equinix is the world's largest data center and co-location infrastructure provider with 220 data centers in 25 countries. And this is the first time that Equinix Metal's interconnected data center will be accessible on a decentralized open source cloud. And soon after that notable partnership, Akash launched Mainnet version 2. And since they constructed their own sovereign chain with the Tendermint SDK, I have a feeling that a lot of Cosmos related projects are going to be taking advantage of the cloud services provided by Akash. And I think they recognize how important this infrastructure piece is to DeFi, because recently they funded a hackathon with $100,000 to accelerate the future of DeFi. Now that I've given you guys a brief introduction to the project, let's talk about the token. Their native platform token is AKT, and their aim is to give this token the following utility features. Number one, it's going to be used as a governance token, and you can use it to cast votes whenever there's a proposal. Secondly, they're going to use it to incentivize providers to offer lower prices and also incentivize stakers to participate in the network longer term by staking. For example, for them to sufficiently decentralize, they're going to need independent third parties to provide computation resources, and to subsidize that, they're probably going to give them AKT tokens. Thirdly, it's going to be used for value exchange. And lastly, it's going to also entitle you to cash flow. So if you stake the tokens, you're going to be eligible to earn a piece of the revenue generated by the protocol. And if you head over to Osmosis, it's actually one of the more liquid pools on the AMM. So if you weren't able to get exposure to the token by going to one of these exchanges, or maybe you didn't want to do the KYC, then you could head over here to Osmosis and get exposure to the token by using this AMM. And this actually brings me to the next segment of the video where I'm going to talk about Osmosis. Like other automated market makers, it also has its native token. It's called OSMO. Aside from bootstrapping liquidity and disseminating staking rewards, the OSMO token is going to give stakeholders the right to vote and help plan to implement new features for the protocol like front-running protection, validator-backed oracles, and more. It's also going to allow for fine-tuning of existing parameters such as liquidity mining incentives, and these can actually be changed on a weekly basis. And even though the teams outline some of the tokenomics, ultimately the stakeholders are going to have the right to shape the direction of the protocol's core tokenomics. This is a little bit unique because typically most protocols are highly centralized in the beginning. They usually have a few actors that make all the decisions. And for most, the general aim is to progressively decentralize. So I'm very curious to see what kind of outcomes this is going to produce. And here's the reason why I want you guys to get excited about providing liquidity. 45% of the tokens that they have are allocated for liquidity mining. And if you look at the issuance per day, it's significantly higher in the first couple years than in the years after. So as early participants, we stand to gain the most. Now the downside for people that are looking to hit it and quit it is that they're going to have these unbounding periods. And that's basically to incentivize long-term liquidity provision, which is great for the protocol from a liquidity perspective, but pretty lame for liquidity providers, because let's say you hear something very positive about a token that you're LPing with, and you're worried about losing a lot of the gains to impermanent loss. If you decided to bond your LP position, you're not going to be able to take it out. The next project I'm going to cover is Persistence. To simply put it, they're basically the first DeFi protocol on the Cosmos network. They're going to be building various types of financial products to serve retail and institutional clients. One of their early initiatives is to bring P assets into the network. This way, for example, let's say you're staking your Atom tokens, and instead of unlocking it, you can collateralize it to get a synthetic version of it. And then that synthetic version could be used to provide liquidity. This way, you're still entitled to all the staking rewards, plus you can use it to provide liquidity into one of the pools. And in addition to that, you can see that they have other products that they have in the works. For example, we're going to see NFTs probably sometime in the future. They're probably going to introduce a money market-like service. And the platform's native or governance token is XPRT. Aside from governance, it's also going to allow people to capture some of the cash flow produced by the protocol. And currently, if you guys deposit your XPRT into a wallet, you can go ahead and start staking it for a fat yield today. If you guys go ahead and stake your token today, for the first 2 years, you're going to earn about 35%. One downside to getting exposure to the token is that it's heavily concentrated in a few hands. Most of the tokens went to the team and people who participated in the private sales. In this cycle, a lot of teams have been imposing vesting periods. I've been trying to find something on the vesting periods for XRP tokens. I haven't found anything to date. If you guys have better luck than I did, make sure to share your resource with everybody else by linking it in the comment section below. Next up, we have Sifchain, the world's first omni-chain decentralized exchange. They're going to support cross-chain transactions from 20 to 25 of the top blockchains such as Bitcoin, Binance Chain, Polkadot, and EOS. They used Cosmos's SDK to build the protocol, and with that technology, they hope to be 100 times more efficient and faster than DEXs on other chains. And they adopted Thorchain's continuous liquidity pool model. In fact, some of the Thorchads from the original Thorchain team are also working with Sifchain. And I think the biggest contribution this protocol is going to make to the Cosmos network is by connecting the EVM ecosystem to the IBC ecosystem. And I think that could lead to an incredible amount of composability. And much like Thorchain, their governance token ROWAN is the base asset for every pool, which means for every $1 worth of external asset locked into the pool, you have to have $1 worth of ROWAN locked into the pool as well. And right now, if you stake the token on one of the nodes, you can earn up to almost 350% per year. I'm not even going to try to speculate on what the bottom is going to be, but the price of the token debuted at around 31 cents, and currently it's trading at 22 cents. And given that a lot of these tokens are probably staked into the node and all the pools require a 1-to-1 ratio of external asset to ROWAN, I suspect that for the most part, the token is going to be very thinly traded. And also, I think Thorchain is going to start making a lot of noise in the coming months. And if Thorchain ends up being successful as I think it's going to be, I think there's a possibility that some of that success spills over to Sifchain. In that setting, I could see people who believe that they've missed out on the Rune token look to get exposure to ROWAN to make up for not getting exposure to Rune early on. For this video, that's all the projects that I'm going to cover. There's other projects that I think that have a lot of potential, which include Terra, Thorchain, Switcho. And the reason I didn't cover them in this video is because I've covered them thoroughly in previous videos. So if you're interested in learning more about those projects, just head over to my website to the Token of the Week section. And if you scroll down, if I have a video on any one of the tokens like Switcho, just click on the full video review link to access my review video and learn more about the project. Now, in terms of my strategy to take advantage of the liquidity mining opportunities that are going to be offered on the Cosmos network across these various dexes that get built, well, I went ahead and converted some of my assets into Atom because most likely a lot of the base pairs are going to be Atom, which means that if people don't have exposure to Atom, if they want to get the liquidity mining incentives, they're going to have to get exposure. And just like with BNB on the Binance Smart Chain, once DeFi related activity increases, and more people get exposure to Atom to take advantage of these liquidity mining opportunities, the demand should drive up the price. And now that I've accumulated a handful of Atom tokens, I'm going to wait for these farms to get set up on Osmosis, Gravity Dex, and other AMMs at launch. And based on the yields and based on the projects that I'm bullish on, I'm going to convert a portion of my Atom tokens into these lower to mid cap projects so I can farm and earn these robust yields. This way, I stay hedged by keeping some exposure to Atom and also get to benefit from any upside in case that lower to mid cap project performs well. And lastly, I'll also be earning a yield on those assets by providing liquidity. So in a way, I'm basically creating a yield generating index. 50% of my position is going to be most likely in Atom. The other 50% is going to be low to mid cap alts. And regardless of them going up or down, I'm going to be earning a yield on all those assets. In the last few months, I've been positioning myself and getting exposure to a handful of these tokens. A lot of what I talk about in this video is discussed in my private Discord channels, and that's also where I publish my moves in real time. Even if you sign up for the lowest tier I have on Patreon for just $20 a month, you'll get a free subscription to my paid newsletter, and you'll also have access to all the private Discord channels I have. And if you're new to DeFi and crypto and you want to expedite your learning, or maybe you just needed a little guidance, by signing up for one of the higher tiers I have for Patreon, you can get one-on-one access with me. If you feel like any of the services would benefit you in any way, make sure you guys go ahead and click the Patreon link in the description below. With that, I hope you guys enjoyed this video. This is CryptoOneStop signing out. I'll talk to you folks next time. Bye.